Welcome to Brain Vision.
So we're to consider the account balances in thousands for the paid months compression. We're to prepare a schedule for the cost of goods manufactured for 2011, and revenues are 600 million. And we have to prepare the income statement for 2011. So we're going to start with the cost of goods manufactured. So we're going to start with the particulars and the amounts in debit and credit. And then the first section will be direct materials. And then we have raw material inventory for beginning. And that's 65,000. Then the next thing is to add purchases. And that is 128,000. And then the next thing would be a cost of materials available for use. And that will be the addition. So that will be 193,000. And then we'll subtract less raw material inventory ending. And then that will be 159,000. So when you less that, you're gonna get, oh, I'm so sorry. The raw materials inventory ending is 34,000. So the subtraction of that is what's going to give you 159,000. And then that is your cost of direct material used. So therefore, the direct labor will be equal to the rest. So that will be 106,000. So now that we have that, we move to the manufacturing overhead. And I'm going to continue with the table, just moving it down. So the first thing would be the indirect manufacturing labor. And that's 48,000. Then the indirect materials. And that's 14,000. Then plant insurance. And that's 2,000. And then depreciation of plants, building and equipment. And this is 21,000. And then plant utilities, and then this is 12,000. And then repairs and maintenance of plants, and then this is 8,000. And then equipment leasing cost, and then this is 32,000. So you add all of that together, and then you get the total manufacturing overhead. And that is 137,000. So therefore, the total manufacturing cost insured would be the addition to the cost of direct material and the direct labor, and that would be 402,000. So now we're going to add the beginning work in process, and that's 83,000, and then less the ending work in process, and that's minus 72,000. And then the answer would be cost of goods manufactured. And that's going to be 413,000. So now moving on to the cost of goods account. Cost of goods sold. So using the same table, we'll have our particulars here and then the amount. So we have the beginning inventory of finished goods. And this is 123,000. Then we're gonna add the beginning finished goods inventory, and this is 413,000. And then what you get is the cost of goods available for sale. And that's basically the addition, which is 536,000. And then you subtract the ending finished goods, inventory, and that is minus 102,000. And then you get the cost of goods sold. And that's going to be 434,000. So now moving on to this last part of the question, which is the income statement for 2011. So we have the particulars over here and the amount. So the first thing is the revenue, and this is 600,000. Then we're going to less the cost of goods sold, which I've found before, which is minus 434,000. Then what we're going to get is the gross profits, and this is 166,000. Then less the general, and the administrative costs, and that's 34,000. And we also less the marketing, the distribution, and customer service costs. And that's minus 62,000. And then what we get at the end of the day is the net income. So when you subtract this, you're going to get 70,000. So that is the net income account for 2011. That's the answer to the question.